Hey guys, it's Ken from Investing Made Easy here, and today we'll be continuing our series investing from $1,000 to $100,000. But before we begin, make sure you like and subscribe because you really don't want to miss this series. Today's episode marks our first experience of a true market downturn. So, what's been happening in the news recently? On the 2nd and 3rd of December, the market experienced a short bear run. The Dow Jones shed around 3%, with the S&P 500 only faring slightly better with a decline of 2.5%. First thing to do when something like this happens is not to panic. We first need to understand why this happened and what opportunities it may open up for us in the future. In this case, the drop is tightly linked to the ensuing trade war between the United States and China. Markets have been rising steadily over the last couple weeks, leading the S&P 500 to its all-time high. This is due to a release in the tension over the US-China trade war. However, a little shockwave was sent through the market on Tuesday as Trump announced that a trade deal with China may not be on the table until after the 2020 US elections. This had a measurable impact on the market, as the market was still recovering from the initial trade war, and it was appearing that a trade deal may be available soon in the future. So, what does this mean for us? As an investor, you begin to build up your own style over time, what times you feel most comfortable investing in, and what risks you're willing to take. My main strategy is to buy into weakness. All of the companies in this series that I've invested in have been run through the stock picker and have excellent fundamentals. Therefore, investing into them in the future should be suitable. Therefore, investing into companies that have performed poorly in the short term is the perfect way to buy into them at a discount. After poor earnings reports, as long as the underlying fundamentals are still okay, the stock should rebound to its previous price. This is why I think now is the perfect time to invest. This is why I made my investments a couple days earlier than the usual once per week schedule on a Thursday, and I invested on today, Tuesday the 3rd of December, as this will give me the greatest discount. Of course, this is a calculated risk on my end. There's no guarantee that this will be the lowest that the stocks will go this week, which is why you have to do your own research and measure for yourself when you're comfortable in investing. So, with that out of the way, let's look at what stocks we'll be investing in this week. I wanted to invest into some real estate companies this week to further diversify my portfolio. Real estate stocks are generally great value stocks with solid dividends, which should pay out for us over time. Therefore, looking at our scores from the stock picker, the companies I've chosen to invest in are L Brands, which is a high street fashion retailer which owns brands such as Victoria's Secret, and for them we've chosen to purchase 13 shares at $17.36 each. Second, we've chosen to pick Vornado Realty Trust, and we have chosen to purchase 4 shares at $63.25 each. Third in line is Host Hotels and Resorts Incorporated, of which we purchased 13 shares at $17.45 each. And finally, to round off our investments this week, we have CBRE Group Incorporated, of which we're purchasing 4 shares at $55.99. You may have noticed that the last 3 of these stocks are all real estate stocks, and that was the main focus I wanted to go for this week to further diversify our portfolio. Now, for our crypto of choice this week, we'll be further investing into Bitcoin Cash. The idea for this is to buy into the weakness of how Bitcoin Cash has been performing in order to lower our average purchase price of the cryptocurrency. And finally, for our index of choice, we'll be investing into the Dow Jones Industrial Average. This is because it is one of the largest indexes and should provide us the most stability in these changeable times. And that rounds up our portfolio for this week. If we have a look at the distribution of our portfolio, you can see that it's getting quite varied. In future from next week, I think we'll have to begin to group stocks into categories instead of individuals, because now there are so many slices of the pie, it's difficult to tell what's what. And then finally, the most important chart is the chart of our performance against the S&P 500. If you're new here, the idea of the series is to build up a portfolio that will outperform the S&P 500 in the long term. At the moment, you can see that a gap is beginning to form from the S&P 500, but we're only beating it by about 0.8%, so we have a little bit more work to do. Fortunately, we'll be taking advantage of the dividends, which should only push us higher in the long term. Thank you for watching this video. If you enjoyed, make sure you like and subscribe for future videos, as you don't want to miss this series, which will be uploaded weekly on a Thursday evening in the United Kingdom and mid-afternoon in the States. If you want to learn more about this series, take a look at the first episode, which will give you more information on what's going on. This has been Ken from Investing Made Easy, and I'll see you